Welcome back to Talk Tickers, you guys, where we break down these earnings calls and give you the insights that you actually care about. So today, we're going to be looking at Instacart's Q4 2024 performance.
Oh, okay.
Did they crush it or did they crumble?
Well, what's really interesting here is Instacart's evolution.
Yeah.
They're not content being just a grocery delivery app anymore.
Right.
Their recent moves really signal this ambition to become so much more, a much broader platform, kind of a daily habit for consumers.
Okay, so let's hit the highlights first.
Sure.
Instacart. They closed out the year with a bang, exceeding their own projections.
Wow.
Their GTV, or gross transaction value, for you finance fanatics out there, jumped 10% compared to a year ago.
Okay.
Reaching a whopping, wait for it, $75 billion.
Yeah, that's significant growth, especially when you consider, the broader economic climate we're in.
Right.
Potentially, slowing down.
Yeah.
Instacart seems to be bucking the trend a little bit.
Right.
Demonstrating some resilience.
Yeah, and it's not just about people placing, a few more orders here and there.
Right.
The number of orders surged by 11% year over year.
Wow.
That tells you people aren't just using it, they're coming back for more often.
Now, here's where it gets a little nuanced.
Okay.
While that order volume is up, that average order value actually dipped by about 1%.
Okay.
And this is largely attributed to those smaller restaurant orders.
Okay.
And Instacart's push to encourage more frequent, smaller baskets with initiatives like that $10 minimum.
Okay, so are they sacrificing profitability for growth by pushing into these new areas?
It's a question a lot of analysts are asking.
Yeah.
It's a valid concern, but Instacart argues that these smaller, more frequent orders are actually key to building customer loyalty and creating that sustainable business model. The idea is once people get hooked on that convenience for those smaller needs,
they'll naturally use it for their larger grocery hauls as well.
Okay, that makes sense. But let's dig into the specifics of their strategy, starting with how they ended 2024.
Sure.
So they managed a 10% year-over-year GTV growth, hitting $75 billion.
Wow.
That's huge.
It is.
And like we mentioned, orders are up 11%.
Yeah.
But we do have that 1% dip in average order value.
Okay.
So what are they doing to offset that?
Well, for one, they're seeing significant growth in advertising and other revenue streams.
Okay.
In fact, their advertising revenue reached an annual run rate of $1 billion.
Wow.
In Q4 alone.
That's not chump change.
No.
So it shows they're not just reliant on transaction fees.
Right.
They're building multiple revenue streams,
Yeah.
which is crucial in a competitive market like this.
It gives them more flexibility, reduces their dependence on any single revenue source. Plus, it shows that they're becoming a more attractive platform to advertisers,
Right.
which could even lead to more growth down the line. So how are they driving growth through all of this innovation?
Well, they're really weaving themselves into the fabric of their customers' daily lives.
Okay.
So think about it. They've rolled out these new service options like Super Saver delivery, free pickup from stores, and expanded family accounts. These aren't just random features.
Right.
These are strategic moves designed to make Instacart more convenient and more appealing for that everyday use.
It's like they're saying, hey, don't just think of us for your big weekly shop.
Yeah.
We're here for those smaller top-up orders, that quick lunch from your favorite restaurant.
Exactly.
Anything you need delivered on your schedule.
Precisely. And that integration of restaurants and that $10 minimum basket are specifically designed to boost that order frequency.
Yeah.
They're trying to make Instacart a daily habit,
Right.
not just a weekly chore.
Not just a chore. Yeah. And then there's Instacart Plus, their membership program.
Right.
It's growing even faster than regular users. Which suggests they're onto something here.
Instacart Plus is a classic loyalty play, and it seems to be working by offering perks like free delivery on smaller orders and exclusive discounts.
Right.
They're incentivizing users to become members and to stay members.
Yeah.
This creates a predictable revenue stream.
Yeah.
And it fosters that all-important customer loyalty.
Yeah, it's like the Amazon Prime of the grocery world.
Right.
You get hooked on the perks, and suddenly you're ordering everything through Instacart.
It's a powerful model, and they're even making moves internationally.
Oh, really?
Partnering with Coles in Australia to deploy their Caper Carts.
Okay.
Those AI-powered smart shopping carts?
Oh, yeah.
This hints at their ambition to expand their enterprise solutions globally.
Okay, it's smart leveraging their existing technology and expertise to generate new revenue streams and gain a foothold in these new markets.
Now, let's not forget the elephant in the room.
Oh, yeah.
Affordability.
Yeah.
With grocery prices soaring. Instacart is trying to make their platform accessible to everyone.
Yeah.
Not just those with deep pockets.
Yeah. They're pushing initiatives like EBT, SN-App acceptance, integrating loyalty programs, and expanding their digital flyer program, which now covers over 80% of their GTV.
Wow.
It's clear they understand the importance of value.
Especially in today's economy.
Yeah.
They're not just doing it alone either. They're actively encouraging grocers to align their online prices with in-store prices, removing a major barrier to online grocery adoption.
Right.
They've already seen success with major chains like Kroger Schnucks Heritage Grocers Group adopting this price parity model.
It's a win-win. Consumers get consistent pricing whether they shop online or in-store.
Right.
And Instacart removes that potential point of friction for users.
And let's not underestimate the importance of those enterprise solutions we mentioned earlier.
Right.
Their Caper Carts, for example, are driving double-digit increases in basket size for retailers.
Yeah, those smart cards aren't just a gimmick. They're a data-driven platform that enhances the in-store shopping experience. And retailers are seeing the results in their bottom line.
And Instacart is seeing the results in their enterprise solution adoption rates. With double-digit percentage growth and 30 new retailers onboarded in 2024 alone.
Wow.
They're positioning themselves as the go-to tech provider for the grocery industry.
Speaking of tech, we have to talk about their advertising business. They've got over 7,000 active brand partners.
Wow.
And their ad platform is attracting more and more retailers.
Yeah.
Clearly, they're doing something right.
Their advertising platform is built on cutting-edge technology. From powerful machine learning models to advanced targeting and measurement tools. They're offering brands a way to reach highly engaged consumers at the precise moment they're making purchasing decisions.
It's a recipe for advertising success. And as they attract more retailers and brands, their platform becomes even more valuable, creating a virtuous cycle of growth.
Now, before we get too carried away with all the hype, we need to take a closer look at their financial health and their future outlook.
All right.
Are they sustainable?
They're definitely in a strong position. They have a growing user base, increasing order frequency, and they're committed to steady annual adjusted EBITDA expansion. They're also taking a disciplined approach to stock-based compensation. Which is a good sign for investors.
They're clearly playing the long game here.
Yeah.
Focusing on building a sustainable business, not just chasing quick profits. But there are some challenges on the horizon.
Like what?
Well, they've mentioned the potential impact of seasonality on advertising revenue. This is something to watch, especially as they become more reliant on advertising dollars.
So a potential dip in ad revenue during certain times of the year. Not ideal.
Not ideal, but manageable.
Okay. Anything else?
Well, they are operating in a somewhat uncertain macroeconomic environment. You know, inflation, rising interest rates, and a potential recession could all impact consumer spending.
Of course.
And slow down their growth.
You know.
Valid concerns, but it sounds like they're aware of these challenges and are actively managing their investments to mitigate those risks.
They're constantly monitoring consumer behavior, adjusting their pricing strategy, and optimizing their operations to adapt to those changing conditions. They're not just sitting back and hoping for the best.
So what's the big takeaway here? What should our listeners be thinking about as they consider Instacart's future?
The big takeaway is that Instacart is a company in transition. They're no longer just a grocery delivery app. They're building a comprehensive platform for all your shopping needs, delivered right to your door. It's a bold vision, and they're executing it well, but the road ahead won't be easy. They'll need to continue to innovate, adapt, and execute flawlessly to maintain that momentum. So let's shift gears for a moment and have some fun. This is not financial advice segment.
Oh boy.
Where we
buckle up.
We let our imaginations run wild. And cook up a purely speculative trade idea.
I'm ready.
So disclaimer out of the way. Hit me with your wildest Instacart trade idea.
Well, we've talked a lot about their push into new areas like restaurants. But what if they took it a step further and launched their own private label meal kits?
Ooh. I like where you're going with this. Instacart branded meal kits delivered alongside your groceries.
Right.
That's a brilliant way to leverage their existing infrastructure and tap into a massive market.
Exactly. They already have the delivery network, the customer base, and the data to understand consumer preferences.
Right.
They could create meal kits tailored to specific diets, cuisines, and even dietary restrictions.
They could even partner with celebrity chefs or popular food brands to create exclusive meal kit offerings.
Ooh.
Imagine an Instacart by Gordon Ramsay meal kit. People would go crazy for that.
It's a bold move.
Right.
But it's not outside the realm of possibility. And if they execute it well, it could be a game changer, driving significant revenue growth and further cementing their position as the go-to platform for all your food needs.
Okay, that's a trade idea worth chewing on, folks. But remember, this is purely speculative, not financial advice. Do your own research, make your own decisions.
For sure.
For now, let's take a quick break. When we come back, we'll continue our deep dive into Instacart's Q4 2024 earnings call.
All right.
With a closer look at their advertising business and their efforts to tackle affordability. Stay tuned.
Sounds good. Welcome back to Talk Tickers. Before the break, we were getting into Instacart's impressive advertising growth. They're on track to hit $1 billion in annual ad revenue. And that's not by accident. You know, they're attracting a diverse range of advertisers, not just those big players.
Yeah, they're seeing a lot of interest from emerging brands, which is a good sign for the long-term health of their ad platform. You know, it shows they're not just reliant on a handful of giant companies. They're building a broad base of advertisers, which makes their platform more attractive to everyone.
And they're laser focused on performance. You know, constantly developing new tools and metrics to prove the effectiveness of their ads. For brands, it's not enough to just throw ads out there and hope for the best. They need to see results. And Instacart is giving them the data to track those results and optimize their campaigns.
It's like they're saying, hey, we know you have other options for advertising. But we're the ones who can show you the direct impact on your sales. We're the ones who can connect you with customers at the exact moment they're making purchasing decisions.
Exactly. And they're going beyond just digital ads.
Oh, really?
They're leveraging their partnerships to reach consumers offline as well. You know, their Carrot Ads program, where they power ads for retailers on their own websites, is gaining traction. They're even experimenting with ads on those caper carts we talked about earlier.
Oh, wow. So they're surrounding the consumer with targeted ads, whether they're browsing online, strolling through the aisles, or even checking out at the register.
Exactly.
It's a pretty smart omni-channel approach.
It is, but, you know, there's always the risk of ad fatigue, right? If you bombard people with too many ads, it can backfire.
You're telling me I've definitely had those moments where I feel like I'm being chased by ads everywhere I go online?
Yeah, it's a delicate balance, but Instacart seems to be aware of that. You know, they're focusing on personalization. Using data and machine learning to deliver ads that are relevant to each individual shopper's needs and preferences.
So it's not just about throwing a bunch of ads at a wall and seeing what sticks. It's about delivering the right ad to the right person at the right time. That's where the power of data comes in.
And they're constantly refining their targeting and measurement tools to ensure that their ads are hitting the mark and delivering a positive return on investment for their brand partners. If the ads aren't working, brands will take their money elsewhere.
They'll go somewhere else.
Instacart knows that.
Okay, so advertising is a big growth area for Instacart. But what about their core business? How are they tackling the challenge of affordability in a world where grocery prices seem to be going up every week?
Well, they're pulling multiple levers. First, they're actively encouraging grocers to align their online and in-store prices. You know, we've seen some success with this, with major chains like Kroger adopting price parity. This is huge because those price discrepancies can be a major turnoff for consumers.
It makes sense. Why would you pay more to shop online when you could just go to the store and get the same items for less?
Exactly.
You know, removes a big barrier to online grocery adoption.
Absolutely. And they're promoting their Instacart Plus membership.
Okay.
Which offers free delivery on orders above a certain amount.
Right.
This can help offset the cost of those delivery fees.
Yes.
Especially for frequent shoppers.
It's all about making the economics work for the consumer.
Exactly. And they're not just focusing on price. They're providing other ways for consumers to save.
Like we all love a good deal.
Exactly. They're investing heavily in their digital flyer program,
Right.
which allows shoppers to browse weekly deals and discounts from their favorite retailers. They've also integrated loyalty programs from major grocery chains,
Okay.
allowing shoppers to earn points and redeem rewards through Instacart.
So you can stack those savings, which is always a good thing. It's like they're building a whole ecosystem of savings opportunities for their customers. They want you to feel like you're getting the best possible deal when you shop with them.
Exactly. And they're not forgetting about making their platform accessible to everyone, regardless of income. You know, their commitment to EBT SNAP acceptance is commendable.
Yeah.
They're ensuring that low-income families have access to online grocery delivery,
Right.
which is critical for addressing food insecurity and making healthy options accessible to all.
It's a good reminder that business success isn't just about profits. It's also about making a positive impact on the community.
Right.
Instacart seems to be striking a balance between those two things.
No, we can't talk about Instacart without mentioning their expansion into restaurants.
Yeah.
It's a bold move considering how competitive that market is,
For sure.
but they bring some unique advantages to the table.
Like what makes them think they can compete with the big players in restaurant delivery?
Well, for one, they already have a massive user base of grocery shoppers.
Right.
Many of these shoppers are already familiar with the Instacart platform and trust its convenience and reliability.
So they're leveraging their existing brand recognition and customer loyalty to jumpstart their restaurant business.
Right.
It's a smart move. Why build a whole new customer base from scratch when you can tap into the one you already have?
Precisely. And they're not just replicating what other restaurant delivery apps are doing.
Right.
They're integrating restaurants seamlessly into their existing grocery platform.
Yeah.
You can order your groceries and your takeout from your favorite Thai place all in one go.
Yeah.
It's all about convenience.
It's like having your grocery store and your favorite restaurants all in one app. That's pretty appealing. And they're offering features that cater to both grocery and restaurant shoppers, right? Like that $10 minimum basket we discussed earlier.
Exactly. You can combine a few grocery items with a restaurant meal.
Yeah.
And easily hit that free delivery threshold. It's a clever way to encourage users to order more frequently, boosting both their grocery and restaurant sales.
Right.
They're creating a virtuous cycle of growth.
But how are they managing the logistics of restaurant delivery?
Right.
It's a different beast than grocery delivery, right? You're dealing with hot food time constraints, a whole new set of challenges.
Well, they're leveraging their existing network of shoppers,
Okay.
many of whom are already familiar with picking up and delivering groceries. They've also developed specialized training programs to equip those shoppers to handle the unique demands of restaurant deliveries.
So they're not just throwing their grocery shoppers into the deep end of restaurant delivery.
Right.
They're providing them with the tools and training they need to succeed. It makes sense. You don't want to damage your reputation by delivering cold food or messing up orders.
And they're using data and technology to optimize delivery routes.
Right.
And ensure that orders are delivered quickly and efficiently.
Yeah.
It's all about maximizing efficiency and making sure the customer has a positive experience.
It sounds like they're taking a thoughtful and strategic approach to restaurant delivery. They're building on their existing strengths while adapting to the specific needs of this new market. It'll be interesting to see how it plays out.
They're not afraid to experiment,
Right.
constantly testing new features and initiatives to see what resonates with consumers.
That's the hallmark of a truly innovative company. You know, they're not content to just sit back and watch the market evolve.
Right.
They're actively shaping it.
Exactly. It's that innovative spirit that has propelled them to their current position.
Yeah.
Now, whether they can replicate that success in the restaurant world remains to be seen.
Right.
It's a tough market.
Yeah.
But they're off to a promising start.
It'll be fascinating to watch their journey unfold. But now let's shift gears and talk about their financial performance. They seem to be in a strong position.
Yeah.
But what are the key metrics we should be paying attention to as we try to understand their story?
Well, the first one is their gross transaction value.
Right.
Or GTV.
Okay.
This represents the total value of all the goods and services sold through their platform. It's a good indicator of their overall scale and growth.
They reported a 10% year-over-year increase in GTV in Q4.
Right.
Which is impressive, especially when you consider the current economic headwinds. They're not immune to those broader economic forces, but they're navigating them well so far.
It is impressive, but it's also important to look beyond just the top-line growth.
Okay.
And examine their profitability.
Yeah, are they making money?
Right. Are they becoming more efficient?
Growth is great, but it needs to be sustainable growth.
Exactly. They're guiding for steady annual adjusted EBITDA expansion.
Okay.
Which is a positive sign. They're not just chasing growth at all costs.
Right.
They're focused on building a profitable business, which is ultimately what matters to investors.
And they're doing this while investing heavily in new initiatives. Like this restaurant expansion and their enterprise solutions. It's a balancing act.
It shows they have confidence in their ability to manage their costs effectively while still pursuing ambitious growth plans.
Right.
That's a good sign.
Another metric to watch is their take rate.
Okay.
This is the percentage of each transaction that Instacart keeps as revenue. It's a key indicator of their pricing power and their ability to extract value from their platform.
They've managed to maintain a take rate in the upper half of their long-term target range.
Okay.
Which is impressive given the competitive pressures in the market.
Yeah.
They're achieving this by carefully balancing their pricing strategy with those affordability initiatives we talked about earlier.
It's a tightrope walk.
It is.
You want to maximize your revenue, but you also don't want to price yourself out of the market or alienate your customers.
Right.
It's about finding that sweet spot.
And they seem to be doing a good job of it so far.
Yeah.
But it's definitely a metric that bears close watching.
Right.
Especially as they expand into new markets and face increased competition. Things can change quickly in this industry.
Okay, so we've covered a lot of ground here.
Yeah.
From their growth strategy to their financial performance. But what about the bigger picture?
Right.
What are the major risks and opportunities facing Instacart as they look ahead? What should investors be thinking about?
Well, one of the biggest opportunities, as we've discussed, is their expansion into new markets. They've already made inroads into restaurants.
Yeah.
And there's speculation about potential moves into areas like pharmacy and convenience goods.
Remember our This Is Not Financial Advice segment where we imagine them launching their own meal kits? That's just one example of how they could leverage their existing platform to tap into new markets.
Exactly. If they can successfully expand into these adjacent markets, they could unlock significant growth. But these expansions also come with risks.
Of course.
You know, they'll be entering crowded and competitive markets,
True.
going head-to-head with established players who have deep pockets and years of experience.
Yeah, it's not going to be easy. They'll need to differentiate themselves, offer compelling value propositions, and execute flawlessly to win in these new arenas. They can't just assume that their success in grocery delivery will automatically translate to success in other areas.
Another key risk is the potential for increased regulation.
Okay.
You know, the gig economy of which Instacart is a part
Right.
is facing scrutiny from lawmakers and regulators around the world.
Yeah.
There are concerns about labor classification worker rights and the overall impact of these platforms on the workforce.
It's a complex issue.
It is.
And it's something that Instacart will need to navigate carefully. They've already faced legal challenges and regulatory actions in some jurisdictions.
Right.
They need to stay ahead of the curve on this issue to avoid costly legal battles and reputational damage.
And let's not forget about the macroeconomic uncertainty we mentioned earlier.
Right.
You know, inflation, rising interest rates, and a potential recession
Yeah.
could all impact consumer spending and slow down Instacart's growth. They're not operating in a vacuum.
Right.
They're subject to the same economic forces as everyone else.
It's a reminder that investing is always about balancing risk and reward. Instacart has a lot of potential, but there are also some real challenges they need to overcome.
It's a complex and ever-changing landscape.
Yeah.
But they seem to be well-equipped to handle it. You know, they have a strong management team, a proven business model, a loyal customer base, and a track record of innovation.
They're not a company that's standing still.
Right.
They're constantly evolving and adapting, but the competition is fierce, and the market is constantly changing.
Right.
They can't afford to rest on their laurels.
They need to stay ahead of the curve, continue to innovate and execute flawlessly to maintain their leadership position and achieve their long-term goals. It's a tall order, but it's one they seem capable of filling.
It's going to be an exciting ride.
It is.
But for now, let's take a quick break. When we come back, we'll wrap up our deep dive into Instacart's Q4 2024 earnings call with some final thoughts and key takeaways for our listeners. Stay tuned. Welcome back to Talk Tickers. We've spent this episode really unpacking Instacart's Q4 2024 performance. And it's clear they're not just delivering groceries anymore.
Right.
They're delivering a whole new vision for the future of online shopping.
Absolutely.
So let's distill all of this down to some key takeaways for our listeners.
Okay.
What are the big things they should be thinking about as they consider Instacart's future?
Well, first and foremost, Instacart is no longer a one-trick pony.
Okay.
They're diversifying their revenue streams like crazy. Advertising is booming. Enterprise solutions are gaining traction.
Right.
And they're strategically expanding into new areas like restaurant delivery.
Yeah, it's a smart move. They're not putting all their eggs in one basket.
Right.
They're building multiple engines for growth, which makes them less vulnerable to any single disruption or an economic downturn.
And it's not just about growth at all costs.
Right.
They're committed to steady EBITDA expansion, which means they're focused on building a profitable business, not just chasing market share.
And they're also being disciplined with stock-based compensation.
Right.
Which is a good sign for investors.
They're sending all the right signals to Wall Street.
Yeah.
Showing that they're not just a flashy growth story.
Right.
They're building a sustainable business for the long term.
And let's not forget how laser-focused they are on the customer experience.
Absolutely.
They're constantly innovating to make their platform more indispensable to consumers, offering more value through things like Instacart Plus, expanding their service options, and aggressively tackling those affordability concerns that we discussed earlier.
It's all about building that customer loyalty.
Yeah.
Creating that stickiness that keeps people coming back for more.
Yeah. And they're pushing the boundaries of innovation on the technology side as well.
Right.
From those AI-powered caper carts to their sophisticated advertising platform.
They're not afraid to experiment and invest in cutting-edge solutions, which is so crucial in a rapidly evolving industry like this.
You stand still, you fall behind.
Exactly.
And they're not just focused on profits. Their commitment to social impact, particularly their leadership in EBT S&OP acceptance, shows they're trying to build a more inclusive and accessible food system.
Yeah, it's refreshing to see a company that's balancing those priorities.
Right.
Showing that they can be both profitable and socially responsible.
Yeah, it's a model for success in the 21st century.
Absolutely.
So Instacart is a company to watch, folks.
For sure.
They're doing a lot of things right, but as with any investment, there are risks to consider.
Right.
They're operating in a highly competitive market.
Yeah.
The regulatory landscape is constantly evolving, and the macroeconomic environment is anything but certain.
They'll need to navigate those challenges skillfully to maintain their momentum. But they seem to have the right ingredients for success.
Okay.
A strong management team, a proven business model, a loyal customer base, and a culture of innovation.
It's going to be fascinating to see how their story unfolds now before we sign off. It's time for our This Is Not Financial Advice segment.
All right.
Where we indulge in some purely speculative, for entertainment purposes only, trade ideas.
Remember, folks, this is just us spitballing.
Yes.
Having some fun. Don't base your investment decisions on our wild imaginations.
Okay, disclaimer out of the way.
Yeah.
Hit me with your most outrageous yet still somewhat plausible Instacart trade idea.
All right, buckle up.
I'm buckled.
What if Instacart decided to leverage their vast network of shoppers and delivery infrastructure to create a last-mile delivery service for other businesses?
Whoa, hold on. Are you saying Instacart becomes like the FedEx or UPS of the e-commerce world that's ambitious even for them?
I know, right? Think about it. They already have a massive fleet of shoppers who are constantly on the move, picking up and delivering goods.
Yeah.
Why not expand that network to include deliveries for other retailers, restaurants, or even local businesses?
They could become the go-to solution for same-day delivery or even same-hour delivery in urban areas. Imagine ordering a new phone online and having it delivered by an Instacart shopper within an hour. That's next-level convenience.
Exactly, and it would open up a whole new revenue stream for them,
right?
Potentially transforming them into a logistics powerhouse.
Yeah.
It's a bold move, but it's not entirely out of the realm of possibility, given their track record of innovation and disruption.
It's a thought-provoking idea, and it really highlights that potential for Instacart to become so much more than just a grocery delivery company. They're building a platform with the potential to really reshape how we shop, how we eat, and how we live our lives.
It's going to be an exciting journey to watch.
It really is.
And who knows, maybe one day we'll be ordering everything from diapers to dry cleaning through Instacart.
Maybe. So the future is full of possibilities. Well, that's it for our deep dive into Instacart's Q4 2024 earnings call. We've covered a lot of ground today, from their financial performance to their bold expansion plans. As always, we appreciate you tuning in to Talk Tickers.
Until next time, keep those stock tickers ticking.
And remember to always do your own research before making any investment decisions, from all of us here at Talk Tickers.
Thanks for listening.